The difference between success and failure in the stock market has nothing to do with your skill set. It has everything to do with your mindset. I'm Evan Lazarus, Chief Knowledge Officer and Mentor for T3 Live. I'd like to invite you to an exclusive trading education event in Charlotte, North Carolina on Saturday, March 16th. Attendees will learn what we believe to be the 5 biggest mistakes that plague the average trader and how to overcome them, with a specific focus on trading psychology and risk management. Reserve your seat at t3live.com or call the number below. I look forward to seeing you there.
Good afternoon, my name is Scott Redler, Chief Strategic Officer of T3Live.com. I'm going to do a quick little Apple video because I think a lot of people are still upset about whether their investment is underwater, whether they've been trying to play a balance that hasn't worked out, whether they've been shorted but not having the conviction to stay with it. There's been a lot of emotions and a lot of emotional strength or emotional capital being put on this stock. And you never know where a stock's going to go when it's in this type of corrective phase. You can only measure it along the way, but what you have to do is you have to leave your emotions at the doorstep. You have to leave your opinions, somewhere else, because those are the type of things that are going to get you in trouble. I'm sure a lot of people that are still holding this, that held their nose and went underwater multiple times, saw the writing on the wall and said, you know what, it's Apple, I'm going to stay with it. And if that's you, you know what, you're probably not alone. But there's never, it's never too late to change your rationale and at least your approach so it doesn't happen again. If you look at the chart of Apple, you take a little trip down memory lane. If you remember, the last trend before it broke, and that was when it followed the 8-day moving average and the 21. So if you remember when it hit the high here of 700 and broke the 21-day moving average, you never really knew where it was going to go. What you wanted to do is test a lot of moving averages along the way, and that's when I said it's a trading vehicle versus a swing trade, which I had for the majority of this move, and we'll measure it at times to see if it's worth staying with. So here was the break, tested the 50-day moving average. Then what happened? It got controlled by this 21-day again, something that you should have noted somewhat. From there, it came to this trend that's been intact since last May, and it bounced off it. So the question was, could it take back this broken support that turns into resistance? And no, it couldn't. So if you didn't get out at the top, which sometimes obviously it's the hardest thing to get out of, no one really is good at picking tops. If you are, congratulations. You could have gotten out right here. And I know taking a loss definitely is painful, but you could always stop yourself from taking a bigger loss. And from here, if you remember the move all the way down to the 200-day moving average. I have a rule when it comes to the 200-day moving average if you come to me. If a stock gets down to the 200-day, typically as an intermediate trend trader, we're long gone, by the 21-day or the 50-day, and we're looking to see if it's if it's like a sell trap where sometimes it breaks below the 200-day, gets the last people out that didn't sell into the strength or didn't have high-level stops, and then if it breaks it, they get out, then 2 days or 3 days later it reclaims it, and then it starts a new upside move like we've seen elsewhere. But if it stays below it and you see no interest at the 200-day, that really means it's a macro sell as well. And we talked about it as the process happened. And if you look back at the chart here at the 200-day, it basically held around it for 2 days with no buy interest, and that was still around 580. And then here was a move down to the red dog reversal. That wound up being a nice trade. Okay, nice trade because we measured it along the way. You saw commitment right here. Then it went through the 200-day briefly. But then if this were going to continue, it should never have broken this area. And I remember that like the back of my hand. I was still long it and I got stopped out. I'm like, you know what? We need to measure this. And then you want to go down a little further. Remember the beginning of the year we were saying, what type of Apple are we going to have in 2013? If you remember, coming into the new year, everyone was saying, oh, you know what? People are probably just selling their Apple because they want to lock in their tax rate because it's going to go up with the whole fiscal cliff. So you didn't know. So what you had to do is you had to be a trader. You had to measure commitment. You had to figure it out. You go back to the chart, you will see that it was a nice trade right here. But then if you also remember, we said if it does not hold this gap, it doesn't mean, if it doesn't show commitment here, it is the same old Apple from this move from the highs. Get out of the way, and you wind up having another move lower. And what's been controlling this? The downtrend. So then, last but not least, just say the recent downtrend right here. If you guys remember, we had a nice little trade here. I'll let you see it a little closer up, which was right into this gap. Wide range bar. First time I put it back on a swing in the virtual trade floor, came back up, filled a portion of the gap, and then I was like, on this day, I'm out. We'll see what happens. And the thinking was, if it's going to be any good, it's got to hold 463. And what happened? It didn't. That was your area to either get out or get short. And as you know, I'm not saying how I've been shorting this whole way down, because I haven't. It's not one of my strengths. A lot of people made a lot of money shorted. I tried to play little bounces and made some money along the way, but had some paper cuts. But lastly, this was the 435 level that we talked about, that it was trying to hold. Then finally, you had your investor day last week. Remember, we talked about what will Tim Cook do? Will he be not Tim Cook, which is what investors wanted him to be? No, he was the same old Tim Cook saying, we're going to do what we want to do, when we want to do it, and how we want to do it. And investors said, okay, then we're going to continue to sell, and the trend stayed the same. They didn't announce a buyback. They didn't increase the dividend. They didn't do a stock split. So what happened? 435 broke. And at that level, as a trader, you say, okay, if I was trying to play a bounce, I'm out. If you're looking for a short entry, that was another nice entry for those of you who keep pressing Apple. If that's you and you're good at it, congratulations. I'm just not. But that was a level to say, okay, I'm not, I'm going to get out of the way and let it do its, its thing again. And then if you go back to the chart, you'll see that, you actually had some nice follow through to the downside. Okay, it broke this support area. Some guys got short. I tried getting short a little bit on Friday. I made peanuts. But then today actually was the first day, I think, in a long time. I didn't even touch it. I didn't trade one share. And granted, people are like, oh, you should have been shorted. You know what? That's fine. I'm not shorting a stock after a move all the way from 700. So, now you go back a little bit more macro, because that's what you have to do. You have to look at this chart and say, what levels do we have now? So with that said, this is your next level here in Apple. Okay, you have this, what is this? This is like 419, which we almost hit today. And then you have a little bit lower. You have like this, I think 408. And then the next level that it broke out from doesn't come until it breaches 400. So with that said, this is how I'm going to continue to approach Apple. Okay, every now and then there's opportunity. There's nice little day trades. Okay, at this point, if you remember the article, the halo cracked, which was, I think, at 540 because of the gyrations. We said, gyrations, if stocks have gyrations, it typically means institutions are, whacking it back and forth to get out of the shares. So you still could have gotten out of 540. And I know that would have felt horrendous, but now you're still 120 points lower. But anyway, the way I'm going to approach it tomorrow is the way I've been approaching it, for the past few months. I'm going to test levels. So now that they got the 2 days to the downside out of the way, now I think it's a little oversold. We could use today's low tomorrow as a pivot, depending on how we open. So you go back to the chart, which you'll probably see on the price point sheet tomorrow, is you will see this price point. Okay, so right now I'm going to be writing down 419. Maybe it purges down to 410 or 408, comes back above, kind of like what you saw here with this red dog reversal, and then you get an upside move. So that's how I'll look at it tomorrow. They just got 2 days more weakness below a key level, and that's what we'll see. But ultimately, who knows? This 400 might be a magnet. This 386 might be a magnet. Nobody truly knows at this point. If you want to keep pressing short, I think you're playing, if you come back to me with a little fire, but I've said that for about 100 to 200 points, and obviously they're not getting burned. They're making money. They took the name Apple out of the chart, and they see a stock that's been showing relative weakness, a stock that can't rally when the market rallies. They're seeing a stock that can't sustain commitment after a 2, 3, 4 day bounce, which those were even hard to find. So they're making money that way. And again, if that's not you, don't do it, or maybe try a little bit to get comfortable, but at least, don't just, try and catch a falling knife. The red dog reversal pattern is made so you could trade a level versus a level and then measure the commitment, which we haven't seen yet. So at this point, hopefully you're not buried here and you've broken a lot of your trading rules. If you did, write down which ones you broke, put it in a journal, so next time you're involved in a longer term situation, you know how to maneuver. You'll be like, oh, I remember this. Because guys who saw the breakdown of JDSU back in 2001 or Microsoft or Dell or Intel or any of those stocks that were the glamour stocks that could do no wrong, they traded through that and realized that stocks could continue lower than anyone really thought, and that you can't have opinions, you can't have emotions, you have to measure the action. So right now, tomorrow, maybe there'll be some opportunity. We are now a week away from or past that investor conference. So, I know last year, it was like 2, 3 weeks later, they finally announced something different. So with that said, maybe he'll increase the dividend. I think the buzzword is people want to see over a 6% dividend yield, and then hopefully it does a big buyback. But at this point, I'm sure the stock split is off the table. Remember the tweeting a few months back, like, split your damn stock, otherwise the street will do it for you. Well, the street split their stock. And at this point, we'll see where we get that reversal pattern. If it shows its face, and at that particular point, you'll see me get long on the virtual trade floor, and then you'll see me talk about whether there's commitment to it, to stay with it, to see whether it's just a cash flow trade or something bigger. And for the past 35 to 40%, it's been nothing bigger than that. It's just been, a rental. And hopefully one day we could rent it, maybe lease it, or you could even buy it again. But at this point, nobody knows where that'll be. And if someone will tell you that they think they know, they're fooling you, or they're fooling themselves. Scott Redler, T3 Live, Apple, taking it day by day. At some point, we'll figure out if there's ever a turn.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.